It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the US gets crypto wrong.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading. Here are your headlines. Johnson and Biden put their Brexit differences aside ahead of the G7 summit. A COVID outbreak in a Cornish hotel isn't derailing Angela Merkel's plan to attend her final G7 meeting. The spotlight now turns to climate. A draft plan sees the richest countries pledging to support the energy transition in the world's poorest. And US consumer prices jumped the most in 13 years, gaining 5% from a year earlier. Asian stocks are steady after a rally in treasuries. Let's take a look at your futures then this morning. They've been pretty flat, pretty lackluster through this early morning here in Europe. Through the Asian session, we've seen gains of around 1/4% over in Asia. In the aftermath for the Asian time zone of that CPI number coming through in the US. We had some time to digest that, of course, here in Europe yesterday. But we do see expectations then for moves in markets fairly muted. And so, too, for the US futures looking fairly flat as well. So European equity markets just opening up this morning, and we've got the FTSE 100 just coming out of the gates, up by 0.1% or so, but no great moves. The IBEX over in Spain up by 0.1%, so very modest gains coming through on these European equity markets this hour. We're looking for reaction in some of the aviation names, some of the hospitality names to some of the latest reporting around June 21st, thinking about the domestic UK story, but not a lot of reaction right now. Perhaps a lot of that speculation about June 21st now priced in. So European equity markets opening slightly to the upside. That's after stocks in the US and treasuries rallied on bets that a jump in inflation is likely to be transitory. We're joined now by Louise Dudley, portfolio manager for global equities at Hermes Fund Managers. Louise, very nice to see you. So it does seem as if the market is increasingly accepting the Fed's view of things, accepting that this is going to be transitory and the Fed therefore is in no hurry.
Yes, definitely, that they will we'll look through it. We're believing the Fed for now. Yes, there might be some indicators that mean that we're a little bit cautious about kind of believing them. Certainly some of the indicators coming in, like we've had rental car numbers moving, but at the same time, it is short-lived. We are still seeing lots of supply chain constraints, which are unusual because of the rebound and obviously the reopening of the economies. And as those dissipate, we expect that to come out, and definitely the Fed holding strong for now with their positioning.
Clearly, the story in the US is about the focus this week has been about CPI and that big jump up, an increase of 5%, and not levels not seen since 2008, and other kinds of impressive stats available. But the PPI story has been absorbing this for a little while. And you mentioned the supply chain. Is it going to be the case then that we do see upticks in prices on factory floors to a large extent, or to some extent, absorbed by business? Is that what you're expecting?
Yeah, so when we see some small price increases in general, that can actually be quite good for the profitability of a lot of businesses. It's when we see sudden jumps, and I think obviously the fact that this has been signaled so widely, everyone's quite aware of it. Everything's kind of moving in stock. We're obviously seeing freight measures coming in as quite high as well, and that's something that is going to hit a lot of businesses across the economy. But at the same time, we are seeing that prices are moving up, so they're able to take that on board. So maybe that ends up hitting the consumer at the end of the day.
Yeah, are you seeing a difference in the way that businesses are managing their stock, their working capital then, Louise? Because, if there's an advantage to having plenty of stock because supply chains are distressed in some cases, are some businesses doing that then, building up their stocks, sacrificing on the working capital side a little to make sure that they can meet customer demand?
Yes, and definitely some of the shocks that we saw coming out of COVID have led to businesses re-examining their whole supply chain logistics, maybe bringing some of those suppliers closer to home, ensuring that they do have that stock such that they can take advantage of the demand that's there for their products. On top of that as well, you've also got some areas of the market that we're just seeing big increases in supply coming through, and some of those temporary shutdowns as the vaccine rolls out and things get going again, they will ease and they will dissipate.
So that's the US story. How much do you think this is a global phenomenon then, Louise? Because we were reminded by the ECB that, of course, they've upgraded their inflation expectations. They do see brighter times ahead, and the growth rebound now increasingly priced in for the Eurozone. But the inflation numbers are not set, according to ECB targets, to go above targets. They're not, according to estimates, not expected to go above the ECB's target of 2% in the next couple of years. So how much of this is a global story, do you think?
We think it is a global story. We've had some of the largest consumer goods companies in Europe coming out and signaling that for their earnings for the next coming quarter and through up until next year, that they will see definitely commodity impacts having an impact on their bottom line. So definitely something that's hitting across the world. And I think, so many supply chains are global now. Energy prices as they move, that's something that hits everyone as well. So definitely not contained to just the US, maybe the Europe a little bit behind, because we haven't seen maybe so much stimulus and so much kind of constraint within that supply. Things have kept moving maybe a little bit more within the European region.
Louise, thanks very much. Stay with us. Louise Dudley from Hermes Fund Managers stays with us a little longer on the European Market Open. Coming up, airline CEOs are warning that the UK is isolating itself as Europe reopens for travel. The industry wants a busy summer season, of course, but the British government remains concerned about the spread of the Delta variant. We'll have the latest next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So I just made my flight from Bloomberg's London office to New York the other week. And even with the madness of travel with 2 small kids, well, and not to mention the tests and quarantine, I cannot tell you how good it felt to be back in the air. And thanks to more people being vaccinated globally and virus numbers steadily decreasing, international travel is eyeing a comeback.
We know there's a lot of pent-up demand for travel. We believe with a lot of conviction that if some of the barriers to traveling are removed, like these quarantine procedures, then we think demand can come back very quickly.
A Collinson survey of almost 50,000 people globally found that about 78% of respondents would travel as long as more people get vaccinated. The Indonesian government is discussing plans to offer vaccines as part of the holiday packages to attract travelers. The US State Department is easing travel advisories for dozens of nations, including many in Europe. The European Parliament gave its final approval to the digital COVID certificate.
For citizens to feel that they have this level of predictability.
I'm going to play stop on profit for Bitcoin. If you follow our trades yesterday, and if you decided to trade Bitcoin, we sold short at 36,752. Okay, right now is the time to play stop on profit in order to secure our profit. And if it will move to different direction, we will sell with profit. So the price I'm looking to sell 36,678. Okay, so if you follow our trades, if you copy this trade, please copy this as well and stay with me. Whatever happened, like I always say, you will not end up in loss. You will close this trade in profit. Okay, I'll speak to you later, guys.
All-American summer that this country deserves.
We can all agree that, well, after lockdowns around the world ease, people indeed are ready to travel, take a break from their homes, but international travel is still tough. For now, domestic seems to be by far the easiest choice.
That was Bloomberg's Caroline Hyde on the global return to international travel and some personal reflections on her own experience. Now, sticking with the travel theme, airline CEOs are warning that the UK is isolating itself. In interviews with Bloomberg, EasyJet's Johan Lundgren and IAG's Luis Gallego Martin urged the British government, to restart international travel as soon as possible.
most of intra-European travel and most of travel from UK to Europe should be able to recover and start because it is safe to do so. I'm very concerned about the fact that UK is now isolating itself and cutting itself off from the rest of the world for no scientific rationale behind that whatsoever.
Vaccinated people or people with tests that they can demonstrate that they don't have the virus or they have passed the COVID, they can travel. And I hope this is going to help to the intra-European traffic. But as I said, we need also to open important corridors, and North Atlantic is one of them. So I think that the meeting they are going to have today and this task force is going to be important. It's only a first step, but we still have an opportunity to save the summer.
Luis Gallego there of IAG. Louise Dudley from Hermes Fund Managers is still with us. How are you approaching the travel sector at this point, Louise? We were hearing from our colleague Caroline about the variation in policy, certainly the UK on a different path at the moment. So how do you approach the travel sector?
Yeah, so as you say, things have been coming back, but they've been coming back quite slowly. So currently positioning is more in the leisure segment rather than the business segment. So we're yet to see that real rebound, particularly in the US. Obviously, so much travel for work that happens through the aviation sector over there, that has yet to come back. But as you say, everyone in the industry is very optimistic as the vaccine rolls out, the uptake is strong, that we continue to get things going again. But definitely at the moment, still kind of looking mostly at some of those more leisure type names, and definitely seeing the pent up demand from people in terms of wanting to go out and wanting to travel as and when they can, and perhaps people moving some of their cash that in the last year they've spent more on kind of home goods, willing to move that back towards the services sector, and definitely that's a trend that we're seeing, that kind of shift in wallet spend.
And what do you see in broader risk appetite then, Louise, thinking about sector outlooks or sector preferences? You've got measures of risk aversion. What are they telling you about how people are positioned at this point?
Yeah, still quite favourable, still quite risk on in terms of their positioning. So we're still seeing people moving into those value names. We're seeing that value trend continue to sustain itself as that value trend actually gains some momentum. So we've kind of flipped through the 12-month point in some of those cheaper names of the area of the market. And alongside that, we've got those kind of cyclical areas of the market that's a kind of more high beta, also continuing to offer that upside. So we've obviously had some very strong market returns already year to date, still some to come, particularly within Europe, emerging markets as well, still some rebound there as well. So definitely looking at those more high beta, more cyclical driven areas of the market in general as offering the best returns currently.
We're thinking a lot about the G7 agenda, Louise, this week, of course, because we're running up to this weekend's meeting, and we saw finance ministers agree to new tax policies. I'm just looking at some lines from the Irish finance minister speaking on domestic radio in Ireland, talking about how he will vigorously, this is Pascal Donohoe, will vigorously make the case for a 12.5% tax rate at the OECD. We know the talk at the moment is about 15%. That's what finance ministers were discussing. We'll see where that heads. But in terms of the minimum taxation level and that conversation, do you see that as something that are you increasingly factoring that in to some of your assessments? I heard a pretty positive take on this in the first hour of programming this morning. Somebody suggesting that in the short term that there were positives because this had come out of global cooperation, which meant there'd be less falling out between nations, and that would be seen as a positive. And the longer term tax negatives perhaps were delayed. What's your take?
Yeah, so definitely is a positive signal of global coordination. You know, with Trump, obviously, the US was a little bit kind of pitted against the rest of the world on some of these issues. We are seeing more coordination, whether that's maybe more coordination against China, which may have some implications for that region. But in general, in terms of the tax, it is something that's going to take a long time to work through the details on. So for now, yes, it's something to bear in mind, certainly looking at which international international businesses have, a slightly lower tax rate.
Okay, traders, as you can see, position closed on Bitcoin at 36,678.
So nothing that
okay, well done, guys. We hold it overnight, so we didn't pay anything for this position. Broker pays us overnight, and we end up in profit. In our case, we closed in 200 pounds in profit. Okay, stay safe, and let's see what today is Friday, what today will bring us, what kind of what new Forex pairs will give us profit.
The Western family has asked Credit Suisse to advise it on the future of the business, according to Bloomberg sources. Chinese ride-hailing company Didi revealed a $1.6 billion net loss for 2020 as it filed for an IPO in the US. The sale will be led by Goldman, Morgan Stanley, and JP Morgan. It may seek a valuation of as much as $70 billion to $100 billion. The company's been trading at a valuation of around $95 billion in the private market, again, according to Bloomberg sources. AMC gave its retail shareholders popcorn, and in turn, it gave the movie theater chain a path to stability. Its meme stock status has led to a credit upgrade from S&P. The company cashed in on share price gains to raise about $1.25 billion through equity offerings. That, combined with the improving outlook for movies, moved S&P to upgrade AMC's rating to CCC+ from a CCC-. Despite the upgrade, the company is still deep in junk territory. And that's your Bloomberg Business Flash. Anna?
Annabelle, thank you. Annabelle Drewlers in Hong Kong. Coming up on this program, as nations race to return to normal, the rise of dangerous virus variants threatens to prolong the pandemic in some places. The Delta strain is now responsible for the majority, more than 90% of the UK's COVID cases, and is rising rapidly elsewhere. So what does the risk of variants mean for the world's reopening? We'll discuss next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 21 minutes into your European trading session, and this is the picture for you. Actually, some surprising levels of movement, perhaps, on these European equity markets, up by 0.2%. The FTSE 100 getting the best of the gains. The DAX a little more held back. Let's move to some movers, and we've got a few stocks to mention for you. I'll do these in sort of reverse order, if you like. We've got Sané Group, financial services based in Jersey, receiving an offer from Cinven, the fifth offer they've received from Cinven, and so that is certainly in focus, and you can see the Sané share price is up by 11.9%. EasyJet up by 1.7%. This despite a lot of focus on what happens in June, although the June reopening is more of a domestic story. The EasyJet, the narrative around international travel kind of moving with its own time horizon, its own timescales attached to some traffic lights here in the UK. And Deutsche Bank down by 3.5%. We've seen a report from Reuters suggest that the ECB wants to see a change of chair there, so we'll track that story with interest. Now, as nations race to roll out vaccines and allow for a return to normal, the rise of dangerous virus variants threatens to prolong the pandemic. In the UK, the spread of the so-called Delta variant has prompted the government to reconsider easing COVID restrictions on June 21st as planned. Joining me here in the studio is Sam Fazeli from Bloomberg Intelligence. Sam, very good morning. Now, we've talked about this data, which I only saw recently, but has been out for a little while, as you mentioned to me yesterday, around the ability of the vaccine to tackle the Delta variant. And there is still some protection, but it's less than there was for other versions of the virus. How long a delay then to the June 21st reopening do we think we're talking about here, given what we know about the reduced efficacy of vaccines against the Delta?
Good morning, Anna. So it all depends on the more data that we still need. So we know that the Pfizer-BioNTech vaccine, there's two elements here. Pfizer-BioNTech vaccine, 88% vaccine effectiveness against infections with the Delta variant. That's great.
After 2 doses.
After 2 doses.
Yes.
So that's the complication. And then AstraZeneca, the 2-dose data was at 60%, but that needs time to mature more. Astra's vaccine takes a little longer to really get going, even after the 2nd dose. So in the next week or two, I think we'll get a better, tighter data set for the 2-dose issue. But so the UK's issue is it's got a large number of people who are 1-dosed, and that's low. That's 30% for both vaccines.
And that's the crucial factor, isn't it? And there are people who are still undosed, and that includes, because we've been vaccinating very strictly by age group, that includes most people under the age of, I think we're doing 25s and overs right now.
Right, and a lot of people under the age of 50 are still in their 1-dose zone. I've just seen some data. There's something called the ZOE study in the UK. I've just seen some data on that plotted people over the age of 55 versus people under the age of 55 in terms of the cases rising, and the over 55s are relatively flat, whereas the major rise is coming in the under 55s, which tells you exactly what we've been talking about. 1 dose or no dose, that's the problem.
And so we get more data on this in the next couple of weeks, so we'll know more, but the delay then could, I'm trying to get a sense of whether we're talking about summer not getting any better than it is right now, or summer gets better from here.
Well, you'll have a wonderful summer going around somewhere in the UK, but the issue is the maths has to be worked out. It's going to be a calculation between the supply of the vaccine, how quickly they can get people to have their 2nd doses, and then at what point does that break the back of the case rises?
And where else are we keeping an eye on the Delta variant? Because this has jumped to the top of the league tables in the UK at incredible speed. We weren't talking about very many virus cases some weeks ago. Now we're talking about many more, and they are predominantly, more than 90% now, I think, of these cases now are of this Delta variant. We've been hit by a lot of variants here in the UK. There was the Alpha one, which seemed to be more transmissible than the original, and now Delta is more transmissible than that. Where else are we thinking that we could see Delta having a similar impact through the summer?
That's the problem of being such a wonderful, open, friendly nation that you keep mixing. I think every country that's not getting to that 50% fully vaccinated group is going to be vulnerable, depending on how much and how quickly they're reopening. So there are the seeds of this Delta variant everywhere. The United States, last number I looked at was at about 4% or 5% of variants that were sequenced. But Anna, you only know what you've got if you actually keep sequencing.
If you keep sequencing. So just to end on this then, 80% of adults in England, estimate from the ONS, have COVID antibodies. that doesn't seem to be enough then.
No, but how good are those antibodies? Are they from your previous infection that basically seems to do not a lot against the Delta? Are they after your one dose? How good are they? That's the problem.
Okay, Sam, thanks very much. As always, thanks for coming to explain it to us. Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. And if you have any questions for Sam about variants, he'll be hosting a Q&A on our T-Live blog. That is on Tuesday afternoon of next week. The data mounts, and so no doubt he'll be telling us new things by Tuesday about where we go here in the UK. Coming up here on this programme, the G7 summit is kicking off. They'll be talking about coronavirus, the fight globally, the provision of vaccines globally. That is certainly on the G7 agenda. The other C's on the list, they'll be talking about climate change and also China. Can they come to any common understanding on the latter? We're live from Cornwall all day. This is Bloomberg.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. Half an hour into our trading session for this Friday morning, and things more positive in London perhaps than anticipated. The Xetra DAX is fairly flat, so all in all up by around 0.25% on the European equity markets. If we have a look at the sector breakdown, you can see where some of those gains in London are coming from. To the upside, we've got basic resource stocks doing pretty well, up by 1.4% this morning. Travel and leisure also rebounding a little, up by 0.9%. To the downside, though, the banks lending some drag, down by 0.6%. Insurance also a little bit weaker. Now, we've seen lots of news coming through from the G7 overnight, including from the talks between the UK Prime Minister Boris Johnson and the US President Joe Biden. In Cornwall at the summit, Bloomberg's Guy Johnson is live for us. Guy, we saw Boris Johnson and Joe Biden then, Prime Minister and President, seemingly getting on pretty well at that meeting. What's come out of it?
What's come out of it, I think, is a good relationship. I think that's first and foremost what both sides would have looked for. The meeting overran. It was certainly what I think both sides looked for. We saw the body language looking pretty good. They discussed the major themes that are going to be coming up at the G7. Clearly, the Prime Minister is looking to get this G7 off on the right foot. He's also looking forward to the COP conference, which is going to be coming up in Glasgow later this year. The UK is pushing a number of different positions, obviously, at this summit. Vaccinating the world, certainly one of them, and that goes hand in hand with the climate agenda as well, trying to get many of the poorer nations around the world on board via the vaccination rollout to get them maybe to sign up to the climate change story that Boris Johnson is keen to pursue at the summit in Glasgow. In terms of what's going to happen today, I think that theme will continue, but I think, Anna, it will get more difficult. The European contingent that is going to be arriving kind of late morning. We'll see Angela Merkel, Emmanuel Macron and Mario Draghi turning up. It'll be fascinating to see whether or not that convivial relationship that has started the summit off will continue.
Yeah, absolutely. I mean, there's a significant change in leadership, of course, from the United States, but we'll see how far that can go in brokering harmony on the three Cs. Let's talk about Angela Merkel then, because there have been some questions about whether she would be able to attend. Some of her German security staff have been self-isolating now because of a COVID outbreak in a hotel in Cornwall, we understand. But there is anticipation that the Chancellor will still be there.
Oh, absolutely. It was a hotel down in St. Ives. It was her security staff. I think there is no suggestion now that she will not be here. In fact, the Europeans, Anna, are very, very keen to make sure that their agenda, their voices are heard. I mentioned the three heavyweight politicians that are going to be arriving. They want the European voice to be heard. There's going to be a lunch, I think, some sort of a meeting taking place between those European leaders to get them all on the same page in terms of the narrative that they are going to be delivering. They want their message heard when it comes to vaccinating the world. The European Union, frustrated in some ways that the Biden administration is able to take the limelight. There's frustration as well, Anna, that while the administration in Washington has changed and Biden is different to Trump, maybe America First still exists as a narrative that the US is keen to pursue. And I think there is a breakdown in trust still that exists between the European capitals and Washington. Maybe the Trump administration, that 4 years removing the naivety that maybe America has got everybody's back. America First still seems to be first and foremost, Anna.
Guy, thanks very much. Bloomberg's Guy Johnson in Cornwall at the G7. Thanks for bringing us the updates on what's happening there. Staying with the G7 Leaders Summit in Cornwall, let's get some further analysis then. I'm pleased to say we're joined by Dame Deanne Julius, Distinguished Fellow at Chatham House and founding member of the Bank of England's Monetary Policy Committee. Dame Deanne Julius, very good to speak to you, and thanks for coming to speak to us on Bloomberg TV. From your perspective, are you pleased to see a return to greater levels of international cooperation at events such as this? I remember years gone by, we used to say, oh, these G meetings, they don't necessarily achieve much. There's just a lot of good words and kind words and handshakes. But for a period, we didn't get all of the kind words, did we? So maybe this is back to something a little more familiar.
Well, yes, thanks, Anna, for having me. I think this is going to be an important one. Not all summits are important. I think the last important one was probably just after the global financial crisis. So maybe it is the case that a crisis is what it takes to bring global leaders together. Now we have the pandemic. We certainly have a health crisis. And I think we may have an economic crisis, although most of the big economies are bouncing back now. So I think it is an important summit. It's also a very high visibility event politically for those leaders. Remember, 4 of the 7, this is their first international summit as leader of their country. So everybody's out there trying to make a good impression. And I think so far, so good.
Yes, whereas Angela Merkel bowing out then at this one. This will be her last G7 meeting. What kind of consensus do you think this group will manage to achieve when it comes to China, Diane? Because we see all of these nations with their own economic relationships with China. They all have their own characteristics, I suppose. So will they be able to find some common ground?
Well, I think the EU has shifted certainly in the last year. They now call China a systemic rival, which is quite a strong phrase for the EU leaders. There is certainly a shared view, I think, that the West needs to make a show of some unity when it deals with the autocratic countries, not just China, but Russia as well. There's certainly problems there. So I suspect at the general level, we'll hear some kind words and towards each other and some strong words about the importance of the unity of democratic countries. Now, whether it goes further than that, I think I personally doubt. I think for Germany in particular, China is its largest trading partner. There are certainly many economic links that will want to be maintained with China. On the climate front, it's important to keep China engaged because they are the major emitter of CO2. So there are cross currents, and whether it will be possible for the leaders to separate the political difficulties that they have with China from the economic benefits of continuing to engage will depend partly on how this goes, but also, of course, partly on how China reacts.
And what do you think is missing from a global economic perspective, Diane? What is missing for the economy to be able to more fully embrace the transition away from fossil fuels and towards new energy and to meet net zero and to meet that challenge, to meet the climate challenge? Is it all about agreeing international standards and getting data to the people who need it? Is that how we manage this?
Well, I think we're at the end of the beginning, as it were. The beginning is to set the targets, to make individual country pledges, the things that were done in the Paris Agreement. But now the next phase is actually much more difficult. I think the objectives are not easy to meet, starting from where we are now. Whether individual countries have the political will themselves to take the tough actions that are going to be necessary. I'm not sure that is the case in the United States, for example, which is very important. So the next step is really the nitty-gritty. It's figuring out whether we do go the route of carbon border adjustment taxes, for example, which the EU has proposed, whether carbon taxation is the right route, whether it's simply a regulatory route, as the UK seems to be taking, with setting a date for the end of selling internal combustion cars. There's stuff happening on the technological front. So there's a lot happening, a lot of discussion. Not too much is happening yet in the way of hard legislation. And
yes,
one of the elements that has not been cracked at all is that actually consumers are going to have to pay higher prices when it comes to fossil fuel intensive goods and services that they take. And that's hardly admitted in most of the political debate.
Right, yeah, that is interesting, especially at a time when we're talking about just how high inflation gets in the United States, certainly, and around the world to a large extent. Let me ask you about the tax conversations, because that has been something that we saw finance ministers agreeing to at a very high level, to agree an international minimum tax. Is this going to have a big impact on the tax take globally, do you think?
Well, it's another one of those things where it's an interesting and a very helpful breakthrough politically. The agreement that was reached by the G7 finance ministers and central bank governors was unexpected, due from President Biden and Janet Yellen's change of attitude compared to the Trump administration. So we now have the outlines, which are very important ones, setting a floor on minimum tax levels for global corporates and reallocating some of those profit taxes that they pay towards countries where the business takes place, which is largely aimed at the digital companies, which of course have extremely high profits in the aftermath of the pandemic. So it's a good time for them to be able to afford to pay somewhat higher taxes in the tax haven countries. So the stars are aligned politically and financially for this to happen. But I think one has to recognize that there are going to be many losers from this. And certainly the Republicans in the United States have already indicated that they're very unlikely to approve any sort of tax treaty, which would be necessary for the full implementation of the agreement. You asked how much difference will it make? Well, the OECD has produced estimates that it would generate an extra 50 to 100 billion additional taxes from the corporate sector. And that would claw back, in a way, some of the reduction in the taxes that the big corporates pay that's happened over the last decade. So it could make a big difference. But this is still the first act of a long play. There are still times to be had in the summer with the G20 negotiations where they have to finalize the details. And then, of course, we've got COP26 coming up in November for some of the climate elements. And these things will all be brought together with trade-offs. So very hard to predict really where we'll end up a year from now.
Yeah, indeed, a very long play, and some of the acts perhaps not even written. Dame Jan Julius, thanks very much for joining us. Distinguished Fellow at Chatham House. Thanks for giving us your thoughts on the G7, the progress they could make and might make and have already made to some extent on certain matters. Coming up here on this programme then, we'll talk about real estate. John Gray made a name for himself by growing Blackstone's real estate arm into a giant with $115 billion in assets. And he's got some advice for investors looking to make sense of the wild real estate market in the United States. Hear what he has to say next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I became an investment banker in the 90s at a time when it was still legal to sack people for being gay in the UK. And I already knew at that stage that I was. And I remember swiping myself through the barrier on the second day after I'd got my ID card and thinking, I leave the real me on the outside and I pick her up on the way home. So I had this absolute sense of exactly that separation that Tina's talking about. And then you realize you spend so much of your life at the office. Colleagues trust you with information, and you're not sharing an equivalent amount of information with them. And there becomes an inequity of trust, actually. And that felt increasingly uncomfortable. But I was actually invited to come out by my MD. I had had some surgery. I was in hospital. She very kindly came to visit me. And whilst I was dosed up on morphine, I introduced her to my partner. And about 3 days later, when the morphine wore off, I suddenly realized I'd outed myself at the office. And she came to visit me for my end-of-year review. And in a time when investment banking structures of progression were very clearly yearly delineated, and said, we think we may be promoting you a year early, but very great congratulations. But if you are promoted to associate, we're going to evaluate you not just on what you do for the team, but what you do for the wider organization. And then she took a perfectly timed beat and she said, have you thought about joining the LGBT society? Now, I can be dense on occasions, but I'm not that dense. And that was a gold-plated invitation to come out and to participate in the society of the organization, and to do so with my management's blessing. So I then did. I took that lead, organized one of the first ever LGBT dedicated recruiting events in the city, and from that point on have effectively had a platform to talk about these things.
That was Julia Hoggett, CEO of the London Stock Exchange, on what prompted her to come out at work. Fascinating listening. And Hoggett spoke there to Francine Lacroix alongside Tina Lee, Deutsche Bank CEO for UK and Ireland, as part of a New Voices London panel on creating an inclusive environment, retaining female talent, and the future of work. And you can watch the full conversation on Bloomberg TV this weekend, with the half-hour special airing at 2:30 p.m. UK time on Saturday. Now, John Gray made a name for himself by growing Blackstone's real estate arm into a giant with $115 billion in assets. Now he's number 2 at the firm. Gray sat down with Carlyle co-founder David Rubenstein for David's new series, Bloomberg Wealth, to provide his insights on real estate investing.
You know, what I'd say is, I don't know if it's advice or what I've learned along the way, but definitely the best thing is to be a high conviction investor. That when you dabble and just put a bunch of money here in things you don't know or understand, it tends to work out badly. But when you see something, single family housing, global logistics, the movement of everything online, and you lean into that, that's when you have the best outcomes. And to me, that's really important.
If I said to you, I have $100,000 and I want to invest it in real estate or something else, that's all I have, $100,000. Where should I put my $100,000 today?
Well, I would say in real estate, you know, we love what we're doing in the private REIT space. I think you can invest in a good basket of public REITs as well. More generally, I think the S&P 500. I think the market's trading, even though values have moved a lot, the market's trading in the low 20s, and when you compare that to where the 10-year is at 1.6%, I think you'll do fine over a long period of time. Plus, there's a lot of exposure to fast-growing tech companies in there.
Where should I not invest my money?
You should stay away from buggy whip businesses. You should stay away from landline phone companies and some of the legacy retailers, some legacy media businesses. You want to focus on the future. And I would just say this on real estate in particular, if I had one piece of advice, where geographically, is go where the creative and technology types are, because those are the markets where there'll be the most economic activity. So the West Coast of the United States, Austin, Texas, Cambridge, Shenzhen, London, Amsterdam, Tel Aviv, Bangalore. Tech is driving so much of the growth in this global economy. Those are the most interesting places to invest.
Okay, do people come up to you at cocktail parties remember what cocktail parties were when people used to get together? They ever ask you for any investment advice? And you always say, just invest with my firm? Or what do you give people advice?
You know, people, it's funny, they often ask me residential home prices, which is not my area of expertise. And, you know, what I tend to tell people is focus on the longer term. Focus on, you know, I think the danger of the world we live in, the sort of Snapchat, TikTok, meme stock thing is dangerous. And what you want to say is this fundamentally a good business? Is it in a good sector? Is this a good piece of real estate where supply is limited, demand is favorable? And if you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
That was the Blackstone president and COO John Gray speaking with Carlyle co-founder David Rubenstein for a new series, Bloomberg Wealth. You'll be able to see more from that on July the 6th at 9 p.m. in New York. Coming up here on this program, Christine Lagarde says it's too early to talk tapering at the ECB. We'll dig into today's market reaction, the story of the week from a European perspective with Ven Ram from our Markets Live team next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 53 minutes into our trading session, things looking more positive, increasingly so actually, up 0.5% on the FTSE 100. The stocks Europe are up by 0.3%. US futures, though, are pretty unmoved, so it's not a read across from the US equity market expectations. US futures fairly flat. Let's talk to Ven Ram from our Markets Live team. Ven, very good morning to you. So around the same time we saw the inflation data drop from the US, we also got a press conference and commentary coming through from the ECB. What was your big takeaway from the European Central Bank? Of course, they didn't do anything in terms of changing their policy. In fact, they did something in reassuring that they were sticking to the higher pace of bond purchases. So was there anything for you to really get into yesterday when it came to those higher expectations maybe for the Eurozone?
Morning, Anna. I think that the ECB pulled off a fine balancing act between the doves and the hawks on the council. It seems that there was a division within the ECB as to whether or not they should slow their bond purchases in the third quarter, but that was not to be. And I think in opting to step up the pace of, keep up with the increased pace of purchases, the ECB has said that, look, we want continuity in these markets, we want stability in these markets, we want financial conditions to not tighten too much, even though we are going into the summer lull. And it's more of the same. And that message was telegraphed so very well. And I must say that Lagarde, in a tenure, has managed to pull off that low volatility act in the markets ever so well, and she's managed it ever so beautifully.
Yeah, it was interesting to watch that. And you talked about low volatility. We have very low volatility in FX markets. And is that because it's now summer? Or is that because we have a big football, soccer championship looming on the agenda and that's distracting everybody? What's driving us downwards on FX vol then, Ven?
Certainly, the football backdrop provides some incentive for low vol, but I think there are structural reasons here. And, you know, on a day like yesterday, when you had the US CPI printing at the fastest since the global financial crisis, if you look at the G10 currencies, they were all pretty much range-bound. The dollar got excited, but not for very long. And to me, that suggests that there are structural reasons going on. One is the central bank put in the markets, and the other is the swap lines, that the liquidity swap lines that the Fed has put in place with major central banks around the world. That means there's just no incentive to bid up volatility in the markets anymore.
Okay. A good place to leave the conversation. Ven, thanks so much. Thanks for joining us. Have a good weekend when we get there. Ven Ram from our Markets Live team. That is it for the European Market Open. Surveillance Early Edition is up next. They will track these positive markets for you here in Europe. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
The key to reopening and growing economies is to vaccinate your people.
Any discussion about exit from the PEP would be premature.
Washington, the UK, plus the European Union
have one thing we absolutely all want to do, and that is to uphold the Belfast Good Friday Agreement.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 11th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The G7 summit gets off to an eventful start. Johnson and Biden put aside their Brexit differences, and a COVID outbreak at a Cornish hotel threatens Angela Merkel's plans to attend. We speak shortly with the former UK Prime Minister, Tony Blair. Inflation in the U.S. tops forecast, with consumer prices 5% higher in May than a year prior. Treasury yields dip back below 1.5% as traders digest the data. And international banking regulators propose to classify Bitcoin as the riskiest of assets, spurring further volatility in cryptocurrencies. So, happy Friday, everyone. Let's get back to our top story. And as the UK hosts this year's G7 summit in Cornwall, the Prime Minister Boris Johnson has placed COVID-19, China, and climate change at the top of his list of discussion points. Bloomberg has also learned that leaders are set to commit to donating 1 billion vaccines to poorer nations over the next year. Well, after President Joe Biden's arrival in Cornwall last night, we saw a reaffirmation of the US and UK's special relationship.
80 years ago, Prime Minister Winston Churchill and President Franklin Roosevelt signed an agreement known as the Atlantic Charter. It was a statement of first principles, a promise that the United Kingdom and the United States would meet the challenges of their age and they would meet it together. Today, we build on that commitment with a revitalized Atlantic Charter, updated to reaffirm that promise while speaking directly to the key challenges of this century: cybersecurity, emerging technologies, global health, and climate change.
Well, joining us now is a man who spent years developing that special relationship, Tony Blair, founder and executive chairman of the Tony Blair Institute for Global Change and former UK Prime Minister, joins us. I'm delighted about that, so thank you so much for coming on Bloomberg. Mr. Blair, when you look at some of the things that we'll get out of the G7, I want to come back to the UK-US relationship in a second, but how significant is this digital tax?
I think it's obviously important, isn't it, that the President and the Prime Minister come together and agree to work together across a range of issues. Obviously, the test will be in the substance, but yeah, and of course, it's an important step.
Mr. Blair, when you look at this, you know, special UK-US relationship, I mean, this was kind of mired in controversy at the start, as we had heard from the Times that there was a démarche of a US official saying that actually the UK should deal with Northern Ireland differently. I mean, do you seen anything like that in your times?
Well, it's a particularly difficult issue because President Biden personally feels very strongly about supporting the Good Friday Agreement. And, you know, when we negotiated that, keeping the open border between North and South in Ireland was extremely important. So obviously that's got the potential to be an extremely difficult problem, a difficult problem principally for the UK and its relationship with Northern Ireland and with the Republic in Europe, but also, of course, it can complicate the American relationship. There are ways through it, by the way. My institute recently published a paper showing how we might be able to align the positions and resolve this question. But yes, of course, it's going to be a difficult issue. But, you know, there are always difficult questions between the President of the United States and the UK Prime Minister. You just got to get over them. And I think the point is that there are huge things that we need to do together right now around global health, around climate change, as the President was saying there, emerging technologies and the relationship with China. So I don't, you know, this relationship between the US and the UK, it's strong. It's got very, very deep roots. It'll stay strong.
So what solutions, Mr. Blair, do you see actually on this Northern Ireland impasse?
Well, you're going to have to try and get down to the practical questions of what goods really come from Britain into Northern Ireland and then with the likelihood of going into Europe. I mean, the problem with the border in Northern Ireland, as was always going to be the case, is that once the UK decided that it was going to do a Brexit that involved leaving the single market and the customs union, and that border between North and South in Ireland was going to become the external border of the European Union, and therefore a hard border. And so the frictionless travel and exchange of goods over that border was in principle, therefore, going to come to an end if the UK came out of the single market and customs union. the way they resolved that through this Northern Ireland Protocol was for Northern Ireland to stay essentially part of that European market system to a large degree, whilst Britain, the mainland, wasn't. So this differentiation between Northern Ireland and the rest of the UK was always going to cause problems. There are practical solutions. I won't get into all the details, but it's a problem that was there from the very beginning. It was inherent in the type of Brexit we did. And the only resolution of it is to try and make sure that you keep Northern Ireland aligned with European regulation insofar as is possible, without completely disrupting the relationship between Britain and Northern Ireland.
But so does that mean that the EU needs to show more flexibility, or is it actually a problem that, you know, the UK has to resolve?
It's partly a problem of trust, actually, Francine. I mean, the two sides of, and there's not a lot of that around, and goodwill. So if you work out what are the practical problems here and you really try and solve them, it's possible to solve them. But it's difficult because of the inherent problem of principle.
The G7 is also, we understand, Mr. Blair, combining forces to deal with Russia and China, but also give new life to global COVID-19 vaccines. Will they achieve real change? Are we seeing much more commonality amongst G7 leaders today?
Yes, I think so. And this is the really important thing. The one thing that is absolutely clear is that we have a reason of enlightened self-interest to make sure that the world is vaccinated as fast as possible, not just our own countries. Because the biggest risk that a country like Britain has, or the USA, or any of the major developed countries, is we can vaccinate our own population. But if the disease carries on mutating, and you get these variants, and the latest one is this Delta variant that originated in India, those variants that are more difficult to deal with because they're more transmissible, and probably with this Delta variant, you need 2 doses in order to be, in other words, fully vaccinated in order to counter it effectively. If the disease keeps mutating like this in different parts of the world that aren't properly vaccinated, then even the countries like ourselves that are vaccinated are going to have a problem. So that's why, again, we've been saying this for some time, you've got to make sure, even this year, that you're getting as much vaccine as possible to those developing parts of the world, so that at least they're vaccinating their frontline healthcare workers, their most vulnerable elderly population, and the main urban centers, which is usually in the poorer countries of the world where the disease is spreading. But this is an absolute priority. So next year, we will probably have a world that's got significant amounts of vaccine. The real question is, this year, in the second half of this year, how do we act quickly so that we cut down the prospect of new variants emerging?
But do you see a real will of actually making a huge difference? We were talking about some of the numbers. Are they going to be enough to make sure that, a big chunk of the world is actually vaccinated in time?
I mean, if the promises are honored, it should be possible by the end of 2021 to have vaccinated the most vulnerable elements of the population. Now, I mean, we've actually said over the next 2 weeks, you could vaccinate or get vaccines out for example, the frontline healthcare workers. Because one thing that's really important in these countries is that at least the frontline healthcare workers are protected if the disease starts to surge. Now, my institute does a lot of work in Africa. We have relationships with many governments there. I mean, the amount of vaccine that's been delivered to Africa is very small. Now, it's true at the moment, the amount of disease comparative with the West is also very small. But if that changes because you get the Indian variant coming into Africa, and it is there now, and you get surges in Africa, then those healthcare systems are going to come under pressure very, very fast. So it's necessary to do that. We've also made suggestions, which I hope the G7 deal with, around genomic surveillance, because we've got to be able to pick up new variants much more quickly. And then one final thing that's really important is that many of these countries who are receiving vaccine, some of the poorest countries, it's not just a question of getting the vaccine, it's having the capacity to absorb them and roll them out effectively to the population. And that also needs working on.
Here in the UK, what should the government actually do about the reopening on the 21st? Should they be much more cautious and delay it because of the Delta variation?
Well, the Delta variation is a big problem. But what I've suggested in recent days is that we do what I think is rational, although I understand it's controversial in certain quarters, which is to distinguish between the vaccinated and the unvaccinated. I mean, if you are vaccinated, if you've got the full vaccination, you are much less likely to get the disease, much less likely to transmit it, and much less likely to be hospitalized. Now, if you're balancing restrictions with risk management, it therefore, in my view, makes perfect sense to give those people who are vaccinated greater freedom to travel, greater freedom from restriction. And those people who can't get vaccinated because, for example, they've got a medical condition, you can make special arrangements for those. But I think it's really important that we try and open up our economy again, because the economic damage is immense. And, you know, in the end, we need international travel to be going again as well. I mean, it's a, you know, and vaccination, okay, of course you can still get the disease even if you're fully vaccinated. But I think that the data, if we published it in the proper way, which is another point, but if we published it in the proper way, I think the data would be very, very clear to people, both with Pfizer, which is a messenger RNA vaccine, and with AstraZeneca, which is an adenovirus vaccine. These vaccines work. They're really effective at cutting transmission, disease, and death.
Mr. Blair, we don't at the moment have mandatory vaccinations for children. Should we have, in light of the pandemic and the turn it's taking?
Well, we should certainly be vaccinating children. I think that's going to be necessary. And again, there's trials that have been done, for example, with Pfizer and 12 to 16-year-olds, I think, which have been positive. Yeah, we will need to do that. I mean, we're going to be in a situation where this disease carries on circulating, mutating for some time. So we're in a long-term management of the virus. And so we need to be dealing with every single aspect of this. And the biggest risk always when you're in a crisis like this is to be able to deal with the immediate problems, but then look at the long-term things you need to put in place. So something else that I think we should really put emphasis on is the development of the antivirals and the biologics that are necessary to be able to cut the severity of the disease if, for example, we get variants that are more resistant to vaccine or completely resistant to vaccine.
Mr. Blair, do you think that Boris Johnson's cut in international aid actually damages the UK?
Yes, I don't think it's a good idea not to do it now at this time. And the US, France, Germany are moving the other direction. Now, look, our commitment to increase aid came out of actually a G7 summit back in 2005 when we put, with America's help, Africa and climate change at the heart of the G7 agenda for the first time. As a result of that, by the way, you've got massive programs of support which have cut the killer diseases in Africa, increased life expectancy, and allowed many of these countries to develop. This is not the right time, in my view, to cut the aid budget. And the aid budget, given the sums of money we're spending on this, it's a small fraction. And, you know, we need to carry on for as parts.
But Mr. Blair, I mean, it's going from 0.7 to 0.5%, and under your government, it was around those levels as well, right? Even 0.4 at times.
Well, we started lower than that. We started at 0.2, but we built it up over time to 0.7. So no, we made a pledge to get to 0.7. We committed to that, and then David Cameron, to be fair, and the Conservatives after us, recommitted to that and put it in legislation. Now, you know, I understand by way of the politics of this, don't get me wrong, Francine, I completely understand. There'll be people at home think, yeah, well, it's fine, you know, talk about overseas aid, but we look after people here first. I get it. But right now, at this moment, especially for Britain being on the global stage and taking a leadership position, which is very welcome to see, it's not, I think, given the money we're saving, it's not a sensible thing to do, because we are going to need to help these countries who have been devastated as much by the economic consequences of COVID as the health consequences of COVID. We're going to need to help them get back on their feet.
But you think also, I guess, because of Brexit, then this is also the right time for the UK to be seen more on an international stage? Is that what you're intimating?
Well, look, even if you hadn't done Brexit, it would still be the wrong thing to do at this moment in time in this pandemic. But yes, I think that the fact of Brexit obviously means that people are watching very carefully to see whether Britain will play a leadership role. And I want us to see us do that, even though I passionately disagree with Brexit. It's happened, it's a fact. And we've got to create the circumstances in which Britain maintains its position as a strong international player working in alliance with others.
Tony Blair, thank you so much, as always, for your time with us. Tony Blair, Institute for Global Change founder there, and executive chairman, and former UK Prime Minister. Now, coming up, U.S. consumer prices jumped the most in 13 years. We get into the inflation debate next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacqua, and we'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of two very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, U.S. CPI for May topped estimates, driven largely by categories associated with a broader reopening of the economy as vaccinations bring the pandemic under control. Now, the jump boosted stocks and sent treasuries rallying. The 10-year yield held the drop below 1.5%. Now, it suggests that investors are aligning with the Federal Reserve's view that inflationary pressures are temporary. So let's get straight to Jeremy Stretch, CIBC, head of G10 FX strategy. So, Jeremy, there seems to, first of all, good morning. I don't want to be rude, especially on a Friday, but there seems to be consensus on the markets that actually we will see an uptick in inflation, but just like the Federal Reserve and other central banks have told us, it's going to be transitory.
Yes, absolutely. That seems to be the message that the central banks are consistently telling the market, and the markets are seemingly believing that at the moment and assuming that the base effects that we're seeing will be largely transitory, the supply bottlenecks that will be an obvious outcome in terms of the reopening scenarios will prove to be temporary as well. And so those inflationary expectations will not become ingrained. But I think some of the inflationary dynamics are becoming a little more worrisome, and I think it's quite interesting to watch the Michigan sentiment inflation indicators today, because if you look at the long-term inflation metric or the survey measure, that hasn't been above the 3% threshold since 2011, and already we're seeing some of those other market-based inflation indicators moving higher. So yes, the markets are believing at face value the message from the central banks, but I think there are some signs that inflation warnings are starting to flash a little more amber. And I think it's important just to remember that warning that was given by Mervyn King, talking about the impact of both fiscal and monetary expansion and the tolerance, it seems, of inflationary pressure. And that could see it become a little more ingrained.
But Jeremy, overall, when you look at the dangers, if we do have the infrastructure plan in the U.S., and it's unclear exactly what shape or form it will take, but if it does go at a pretty substantial level, and the U.S. economy does overheat, where do you see it first? Is it inflation, or is there another indicator?
Well, you're absolutely right to underline the fact that the infrastructure package is part of the overall process. And I think it's interesting that, of course, President Biden's initial interpretation or iteration of that infrastructure package is being gradually whittled away by the politicians on Capitol Hill. So I think, well, ultimately, when we do see something eventually hit the statute book, it will be substantially smaller than perhaps the initial estimates or fears had suggested. So that will limit to an extent the potential inflationary pressure. But I think it is going to be a case of watching the inflation dynamics particularly. And I think also the other important variable is, of course, the Fed are very mindful of the employment backdrop. But in terms of that employment backdrop, we also watch that wage component particularly closely.
Jeremy, what does this all mean for dollar?
Well, I think the dollar is interesting because, of course, we had seen real yields coming under some pressure. And I think if we are going to see those continue to be compromised in terms of those real yields, I think despite the moves that we've been seeing in nominals, I think it's the real yields that ultimately matter. And if those real yields are going to continue to be remaining depressed over the course of the next couple of months as we continue to see these base effects work through, then I think there is a risk that we do see the dollar just drifting a little bit lower. But I think as we go through the summer and then we start to focus a little more directly on the tapering debate, then I think there is an opportunity for the US dollar to start to recover. So I think it is a case that, yes, positioning is quite extreme in terms of dollar shorts, but ultimately if we are going to see real yields remaining pressured, at least for the short term, then that might just encourage the dollar to remain pressured. But I think it will provide an opportunity later in the summer to start to reload at slightly better levels.
I mean, we've been talking for 4 minutes. We haven't even mentioned the ECB yet. What was your main takeaway from, the press conference of President Lagarde? It seems that, she was really at pains to make sure that the markets understood that for the moment policy is steady.
Absolutely. I mean, the reference steady hand, I'm not quite sure how many times she utilized it in the press briefing, but it was several. And I think you're absolutely right. She was keen to underline the fact that she was trying to maintain an even hand. So on the one side, maintaining that reference to the PEP purchases, but ultimately, when you looked at the changes in terms of the staff forecast for GDP, those were a little firmer than expected, the 0.6% increase in both this year and next, and particularly for this year in the context of the weaker start that we had to the year, does suggest that the ECB are anticipating a pretty strong rebound in the second half of the year. And I think it was also interesting that President Lagarde was able to say the risks to the economic outlook were balanced. And of course, that's the first time she's been able to say that since she's been in situ. So I think she was trying to maintain an even hand, but I think increasingly over the course of the next few weeks and months, we will find that the hawks in the governing council will become a little more vociferous. Be interesting to see what Klaas Knot has to say, for example, today. And as those hawks become a little more vociferous, I think the tapering debate will be really live come the September meeting. And so I think there is some scope for the euro just to pick up a little bit of valuation here. So I wouldn't be surprised if we retest the year-to-date highs. But I think ultimately, if you want to maintain a sort of a bullish euro bias, you probably want to be looking at crosses like euro-yen rather than necessarily euro-dollar over the longer term. And ultimately, if you want to, to benefit from the eurozone recovery even further, then you probably want to look at the higher beta currencies within Europe, such as the Swedish krona, for example.
Jeremy, thanks so much. Jeremy Stretch there, CIBC, head of G10 FX strategy. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. In Cornwall, Boris Johnson and Joe Biden put Brexit tensions aside ahead of the G7 summit. The UK Prime Minister said their talks were wonderful and Biden didn't push him to fix ties with the EU. Emmanuel Macron is, however, holding firm, insisting the EU won't renegotiate the Northern Ireland Protocol. Meanwhile, Prime Minister Boris Johnson is mulling a decision on whether to lift remaining pandemic restrictions. Sources tell us that the surge in UK cases of the Delta variant, first identified in India, makes an extension now likely. The lockdown was set to end on the 21st of June. Johnson faces intense pressure from his own party to reopen the economy, with 78% of UK adults now having received at least one vaccine. And Amazon wants office workers to return at least 3 days a week by September in a more relaxed stance from its previous position of returning to an office-centric culture. The Seattle-based company follows other tech peers in setting a hybrid model to appease employees who have now become used to really working from home. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, the G7 summit kicks off. We're live from Cornwall all day. Of course, some of the conversations that they'll have. Yesterday, we heard from Joe Biden and President Trump that they still have a special relationship, but really the overall trajectory today is talking about green things, including, for example, a push towards electric vehicle. And the other one, which we were also talking to Tony Blair about, was, of course, the push to have more vaccine doses, especially for the developing world. This is Bloomberg.
It's such an interesting new world. The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Now, the G7 summit gets off to an eventful start. Johnson and Biden put aside their Brexit differences, and a COVID outbreak at a Cornish hotel threatens Angela Merkel's plans to attend. Inflation in the U.S. tops forecasts, with consumer prices 5% higher in May than a year prior, while Treasury yields dipped back below 1.5% as traders digested the data. And international banking regulators proposed to classify Bitcoin as the riskiest of assets, spurring further volatility in cryptocurrencies. Well, good morning, everyone. Happy Friday. I'm Francine Lacqua in London, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 11th of June. Now, straight to our top story, and as the UK hosts this year's G7 summit in Cornwall, Prime Minister Boris Johnson has placed COVID-19 China and climate change at the top of his list of discussion points. Preliminary talks between Johnson and the U.S. President Joe Biden saw them put aside differences on Brexit to reaffirm the special relationship. Well, in Cornwall, at the summit, is Bloomberg's European close anchor. He is Guy Johnson. Guy, always great. This is the only time that I actually get to talk, about work with Guy Johnson. Boris Johnson and Joe Biden met yesterday. What actually came out of it? It was much more friendly than, certainly the press was saying maybe 48 hours ago.
It was extremely friendly, Francine, and I think both leaders really wanted those optics to come through, and I think they got what they wanted. So the body language, the narrative, incredibly positive. The meeting that the two leaders had overran. Dominic Raab talking about the fact that that was incredibly positive. They had lots to talk about. So the optics really solid for both leaders. Joe Biden is here in Europe. He wants to sort of present this idea that we have moved on from the Trump administration. But EU leaders are going to be gathering later here, Francine. They're going to be arriving kind of late to mid-morning. And their view is that, yes, the leadership in Washington has changed. The real question is, has the objective changed? Is it still America first? Can America be trusted? And I think that's where we're going to see some friction potentially later on. Angela Merkel, Mario Draghi, Emmanuel Macron, they are forming a unit trying to sort of present a unified European approach and European power. These are heavyweight leaders, and they really want to exercise that power here today.
So some Germany security, of course, are self-isolating. This was kind of, definitely made the rounds last night after a COVID outbreak at a hotel near the G7. Is Angela Merkel, Guy, still planning to attend the summit?
Oh, absolutely. So the hotel down behind me in St. Ives, 13 out of the 17 staff at the hotel testing positive. A number of Angela Merkel's security detail were staying there. I would be very surprised. In fact, I know that this is not going to derail her appearance here at this G7. Remember, this is her last G7, and as a result of which, as I was just mentioning it, she wants to use the authority that she has, that Emmanuel Macron has, that Mario Draghi has, really to present a unified and powerful European pitch to the G7, presenting a unified approach, and Angela Merkel will not be dissuaded from showing up here. Her security detail, I'm sure, will be able to find a workaround on this. But it does highlight the security risk that COVID does pose. These summits, I have to say, Francine, we're being tested every day. You have to show that certificate to be able to gain access to the complex. It is taken very seriously.
Yeah, I'm sure it is. As you say, this is the first actually G7 in person, so I'm sure she'll do everything she can not to stay away. We saw this draft announcement, Guy, and it's very much on COVID vaccinations, but also on climate change and helping the poorest nations in tackling this. Do you just see the G7 leaders having much more commonality than in the past?
Well, again, I think it's going to be interesting to see exactly what happens here. The EU has been the largest contributor globally of COVID vaccines, certainly to COVAX, and I think there's a certain sense of frustration that the US leadership has been able to generate all the splashy headlines, has been able to take the headlines. And again, Joe Biden is attempting to do that here. He's coming out with a very big number in terms of what the US is going to be contributing. And as a result of which, I think there's probably going to be some pushback from these European leaders. We're going to be speaking to Charles Michel very soon, the council president. It'll be interesting to hear what he has to say on this. Certainly, I'll be asking him about this. I think there is a desire from everybody to deliver these vaccines to the rest of the world. And certainly Boris Johnson is determined to lead that. And I think there is the added benefit of this as well, in as much as many of these poorer nations, Francine, are saying, why won't you give us the vaccines when you want us to sign up to your climate pledges? The two need to kind of mesh together. If you can give us this, maybe we can help you out with this. So I think Boris Johnson certainly is very keen to pursue that ahead of the COP meeting in Glasgow later this year.
Guy, thank you so much. Bloomberg's European close anchor, Guy Johnson, there in Cornwall at the G7. I have to say, looking very dapper, very Cornwall chic guy. Now, Blackstone president and COO John Gray says it's still a pretty good time for real estate. Gray gives his insights on the booming property market on the first episode of Bloomberg Wealth with David Rubenstein.
There are a couple of ways. One is there's a public REIT market where you can invest in some excellent companies here in the United States. There are REITs, frankly, around the world. That's one way to do it. Another way to do it today is we have things called private REITs. We at Blackstone have a vehicle called BREIT. which today owns primarily logistics and rental apartments across the southeast and southwest of the United States. It is a product that we're very proud of because historically, people did not do a great job offering private real estate to individual investors, and we've really focused on trying to deliver a first-class product and done by our people in the right way. And that's another way to do it. There are others who offer similar products. For some who are more adventurous, they can partner with local developers, let's say. The challenge I worry about that is just misalignment of interests and liquidity. How do you get out at some point, investing, and you're generally not getting a lot of diversity in that approach.
Well, are you worried about the economy now? The economy's been pretty good, but it probably will head down at some point. The economy is always correct. So if I say I want to invest in real estate, is now a good time, or should I wait a while before the economy corrects?
I think it's still a pretty good time for real estate, and I'd say it for a couple of reasons. One is the warning signs for real estate are twofold: too much leverage, too much capital, and we don't really have that in the real estate system today. The other, too many cranes, too much building, and we're actually below historic levels in terms of new supply. The other thing I'd point out, if you looked at the S&P 500, it's delivered something like 4 times the return of public REITs since the beginning of 20, before COVID. So real estate is lagging coming out of the recovery because obviously people have been concerned about the physical world. I think real estate here, as the economy reopens, people go back into spaces, is going to see a little bit of a bounce. I think the risk is, do interest rates move a lot? That's a bit of a threat. I would say one positive thing about real estate also is inflation, remember, drives up the replacement cost of buildings. And that gives you a little bit of a cushion on existing real estate.
Well, that was the Blackstone president and COO, John Gray, speaking with the Carlyle co-founder, David Rubenstein, for a new series called Bloomberg Wealth. Now, you'll be able to see more from this interview on July 6th, 9 p.m. in New York, when Bloomberg Wealth with David Rubenstein debuts globally. And on June 23rd, we'll also be speaking with Stephen Schwartzman, BlackRock CEO and co-founder at the Qatar Economic Forum. We'll be discussing leadership in a post-pandemic world, so don't miss that conversation. But coming up, we hear from Tina Lee, Deutsche Bank CEO for UK and Ireland, on the importance of identifying and nurturing talent. That's part of our Money and Equality special. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
world leaders meet. On the agenda, global tax, security, climate change. Tune in for extensive coverage from the G7 summit in Cornwall, England, and the NATO summit in Brussels. Live on Bloomberg Television and Radio.
I think we're pretty good at hiring, particularly at the junior level. Every institution tries incredibly hard to get a good gender balance at the intern level and at the graduate level. I think the real challenge is what happens once they get into an organization. And certainly what we see, and I think it's aligned actually across the industry, is we lose women at every corporate title. Yeah. It's not necessarily because they're leaving to have children. They leave at VP, they leave at director, they leave at managing director, so that by the end, you're left with a relatively small cohort versus what you started with. So I think as an industry, we have to do much better in terms of not only identifying talent, but most importantly, nurturing talent at those critical phases, and particularly at the VP level, where there are hundreds of VPs, thousands of VPs. And how do you make sure that you've identified and nurtured that talent and give them the right voice?
Well, that was Tina Lee, Deutsche Bank's CEO for UK and Ireland, talking about the importance of hiring and retaining female talent. Now, I spoke to Tina Lee alongside Julia Hoggett, Chief Executive Officer of the London Stock Exchange, as part of a New Voices London panel on creating an inclusive environment, nurturing talent, and the future of work. And you can watch that full conversation on Bloomberg TV this weekend with a half-an-hour special, which airs at 2:30 p.m. UK time on Saturday. It's really a good one, so don't miss it. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Chinese ride-hailing company Didi revealed a $1.6 billion net loss for 2020 as it filed for an IPO in the US. The sale will be led by Goldman, Morgan Stanley, and JP Morgan. It may seek a valuation of as much as $70 billion to $100 billion. The company has been trading at a valuation of around $95 billion in the private market, according to Bloomberg sources. Now, AMC gave its retail shareholders popcorn. In turn, it gave the movie theater chain a path to stability. Its meme stock status has led to a credit upgrade from S&P. The company cashed in on share price gains to rise about $1.25 billion through equity offerings. That, combined with the improving outlook for movies, moved S&P to upgrade AMC's rating to CCC+ from a CCC-. Despite the upgrade, the company is still deep in junk territory. And Tesla CEO Elon Musk showed off his Model S Plaid, the electric car maker's quickest vehicle to date, at an event for customers at the company's factory in Fremont, California. The phrase Plaid mode is a reference to the 1987 comedy movie Spaceballs by Mel Brooks.
Why make this really fast car that's crazy fast and everything? And I think there is something that's quite important to the future of sustainable energy, which is that we got to show that an electric car is the best car, hands down.
And that's your Bloomberg Business Flash. Francine.
Yeah, and thanks so much. Now, U.S. CPI for May, topped estimates driven largely by categories associated with a broader reopening of the economy as vaccinations bring the pandemic under control. Now, the jump boosted stocks and sent treasuries rallying. The 10-year yield held the drop below 1.5%, suggesting investors are aligning with the Fed's view that higher prices are temporary. But for the emerging markets, rising inflation is a good thing. My next guest says the EM assets do best in high inflation, high growth scenarios. Well, she adds that the world is entering such an environment now. Joining us now is Marie-Thérèse Barton at Pictet Asset Management, Head of Emerging Debt. Marie-Thérèse, thank you so much. I couldn't be happier to have you, especially on a day where we talk about inflation and the day of the G7. What's the environment like for emerging markets right now? If the Fed and the markets are right, and it seems that they're getting aligned more and more, we'll see inflation, but it's transitory. What emerging markets can take advantage of that?
Great question. We feel that potentially the narrative for emerging markets, it's about to turn a lot more positive as we enter into H2 and as we enter into the later summer months. I think key for us here, in fact, is the real yield differential that we're seeing. For most EM central banks, they've actually taken a pivot to hiking cycles. And in the absence of a real change from developed central banks or seen a pivot, EM central banks are hiking interest rates. We've got Russia and the central bank meeting today. We've got Brazil next week where we're expecting interest rate hikes. So we think overall this is going to be providing a real support to local assets. At the same time, we're seeing a pickup of inflows into EM. 3 weeks of inflows into EM currency debt, pickup of inflows into local currency debt in the last week, while we're expecting to see the EM-DM growth differentials start to improve as we go into the latter part of the year, and of course linked to better vaccine deployment and rollout that we see in EM, which of course is headlines today with the G7 announcement.
So, Marie-Therese, I know you're focusing quite a lot on Latin America. I mean, of course, I imagine that Brazil is very different to an Uruguay and other country. Where do you see the biggest investment opportunity for markets?
Latin America is a really interesting area at the moment, particularly when we're thinking about the impact of COVID, in particular on the impact of social environment and the shift to left-wing policies that we're seeing, you know, Peru being a case in point, but also what we've seen in potentially Colombia with a rise in social tensions and also in Chile as well. But overall, at this juncture, in this backdrop with global reflationary opening up trade, recovery trade, commodity prices, we feel this is a strong environment for Latin America. And thinking about Brazil, thinking about high carry currencies, that's including Brazilian real, Mexican peso, providing interesting opportunities. And particularly in the high yield space, actually seeing the opportunity in LATAM for the high yield names to be compressing versus US high yield. We think that's an attractive proposition over these summer months.
Marie-Therese, when you look at some of the things that, you know, we've been talking about that leaders will decide on, which is climate change and, of course, COVID-19 vaccinations, do the two go hand in hand? And does that also impact, you know, I guess, is it the countries that get vaccinated quicker that you want to be invested in? Or does that, you know, mean that you see less opportunity because it's already priced in?
It's a very interesting question. We're doing a lot of work looking at vaccine deployment, looking at five-day changes in COVID cases and seeing how that is linked to growth expectations and ultimately how we think the assets will be performing. So it's something we're watching very closely. So, for example, in the last few weeks, we've seen first dosage of vaccinations pick up in Brazil, also Mexico, feeding into this more positive narrative in China as well, but potentially more disappointment in India and South Africa vaccine rollout. So where we expect vaccine deployment to be by late summer, which would be at 50% in Brazil and Mexico, we would want to be thinking about that in terms of how to be pricing that into the market and would definitely be feeding into our more positive narrative of those markets.
Marie-Therese, I know, you know, we need to talk a little bit about commodities, given some of these, a lot of these emerging markets are linked to commodities. What's happening in commodities right now? It's not really the super cycle that we've seen in the past.
No, not yet, as some people may say. But, you know, I think this greening of the economy is a really interesting aspect. And, you know, the rebalancing of China growth, focusing on domestic demand as well, and what that will mean for demand for commodities and which will potentially be benefiting for the LATAM market. So potentially not a super cycle, but certainly a tailwind that we can think about for emerging markets at this juncture, and in particular, some of the LATAM markets that we're focusing on.
Thank you so much for joining us, Marie-Therese Barton there, Pictet Asset Management Head of Emerging Debt. Now, coming up, Bitcoin could soon be classified as the riskiest of financial assets, dragging it, kicking into the mainstream. We'll have the details next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bitcoin could soon be classified as the riskiest of financial assets, dragging it further into mainstream. It would also make it extremely costly for banks to hold digital tokens on their balance sheets. Well, joining us now is MLive's Eddie van der Walt, the great student of everything crypto and Bitcoin. Eddie, if you look at these new rules, so first of all, does Bitcoin want to be dragged more into mainstream? Right, because then I guess almost automatically the price of it goes up, or is it something that means extra regulatory scrutiny?
Oh, wow. I love how you positioned that question, because, yes, this is what is happening to Bitcoin, right? It is being brought into the mainstream, and there are, and this opens it up to a new class of investor that didn't have access before. But there are many out there that will say, look, we kind of like the fact that it's on a, in a parallel universe, on a parallel system, that it is the Wild West, that we can speculate without anybody telling us what to do. But this increased regulation does bring with it the opportunity for banks, for pension funds, for institutional investors to take positions in it. And that brings more money into the space. And I in the short term, yes, it will hurt Bitcoin, because there's going to be people that say, well, look, what I have done in the past, I won't be able to do in the future. But I think ultimately, if you tell the banks, listen, this is the most risky asset class, you can only hold this smaller percentage on your balance sheet. There will be some banks out there that will say, actually, that means I can hold some Bitcoin on my balance sheet. You see what I mean? So I think for some in the crypto community, this might be a negative, but I think ultimately in the long run, and I'm scooping myself a little bit because I'm going to write this on Monday, but I think ultimately this is what is happening, that it is a positive in the long run for Bitcoin.
I like that. Auto scooping is allowed. Scooping, colleagues is not. So what's the likely longer term effect on Bitcoin? Like, when do we find out exactly what happens because of this extra scrutiny?
Look, I worry. So this is it's not a short-term trend, and there seems to be, from the US, from China, from the BIS, from everywhere, there seems to be increased scrutiny. And in the short term, in the medium term, even that could be a negative. I feel there's just a risk that we are entering another crypto winter, like we saw after 2017, like we saw after 2012. That there will just be a period in which Bitcoin is not that exciting. Right, and we may even see more drawdowns. But I think ultimately mainstream adoption is needed for this for this asset class to take on the world in the way that it promises to.
Eddie, thanks so much. As always, Eddie van der Walt there from our MLive team. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kay Lyons out of New York. We'll have a full roundup of the markets. Now, the markets will also take, of course, their cue from what's happening in the G7. We have our very own Guy Johnson with a very important interview, Charles Michels. That's coming up in the next couple of minutes. We'll get the lowdown on what it means for vaccinations. Yesterday, we heard from President Biden about this special relationship, of course, between the UK and the US. The G7 today seems to be combining forces to deal with Russia and China, but also give a new life to some of these COVID-19 vaccination goals. Will they achieve what they want to? What does it mean in terms of the Delta variant? And of course, what does it mean for climate change goals? We have you covered for the G7. We also have you covered on extra market analysis on inflation. This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents, which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The key to reopening and growing economies is to vaccinate your people.
This has to be a big wake-up call. I mean, we have to work together as a global community. Viruses do not respect borders.
This task force is going to be important. It's only a first step, but we still have an opportunity to save the summer.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning, everyone. 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York on this Friday, June 11th. And our top stories today. As the G7 summit gets off to an eventful start, European Council President Charles Michel joins us live from Cornwall for his first ever interview with Bloomberg. ECB President Christine Lagarde remains sanguine on inflation, while the Federal Reserve contends with rising price pressures. And international banking regulators propose to classify Bitcoin as the riskiest of assets, spurring further volatility in cryptocurrencies. So there's quite a lot going on. We're expecting the G7, after President Biden met with Prime Minister Boris Johnson today, to focus really on vaccinations, on how to deal with China and Russia, and of course, on climate change. Kaylee, how's it all playing out on the markets?
Well, the market is trying to decide whether or not it thinks that upside surprise on CPI yesterday meant anything at all. And what it seems like is it's decided it believes the Fed, and it is indeed transitory. What we saw in the Asian session was a bit of a mixed picture. You saw Chinese equities actually the ones that really underperformed. The CSI 300 down about 0.9%. Hong Kong stocks were higher, though, as was the Kospi in South Korea. And speaking of South Korean assets, I wanted to point out their 3-year bond yield up at 1.3% or so, which is actually the highest level going all the way back to February of 2020. And that is after the Bank of Korea governor signaled the need to normalize policy. In foreign exchange, I also wanted to point out what's going on with emerging market currencies climbing to an intraday record high. As for what the picture looks like here in the U.S., we saw stocks rise to a record high and bond yields fall even after CPI rose more than expected in the data we got yesterday. This morning, not a ton of movement. We are seeing futures inch higher, up about 2.5 points on S&P E-minis. In the Treasury market, we're holding right around that 1.43% level, which is the lowest since March. A lot of what we've seen this week, which has been the biggest decline for yields on a weekly basis in about a year, has to do with short positions unwinding, a little bit of a squeeze going on. The dollar essentially flat on the day after earlier weakness. And then, of course, Francine mentioned Bitcoin. It's trading right around $37,000. Is banking regulators making it more costly for banks to hold it on its balance sheet a good thing or a bad thing? That is exactly what the market is trying to figure out, Matt.
Yeah, that's a very good question, because on the one hand, they're going to be less likely to want to hold it if it costs more. On the other hand, now that they know the official regulations, the rules are in place, and they can move forward. Fran, we're looking at gains across Europe today, especially in the UK, especially on the Iberian Peninsula. Take a look at the Stock 600 and you'll see that it is up. The interesting moves to me really are in rates as the US bounces back a little bit in terms of the 10-year. We see bunds coming back down. We see gilts coming back down in terms of rates. In fact, wherever you look across Europe, you see rates falling. So investors are buying those bonds. And then Deutsche Bank, you know, yesterday warning of a $360 million hit, but that had to be priced in during the session. This morning, we got a report out from Reuters that the ECB is pressuring Deutsche Bank to name a new chairman. Paul Achleitner retires next year, but the ECB wants to know now who it'll be so they have time to vet the candidate.
Yeah, one of our biggest stories, actually, and of course, what that means for the German banking landscape. Now, Matt, this is what else we're looking at today. Now, there's quite a lot going on. Of course, it's all about the G7. Apart from the G7, there's the Bank of Russia, the latest central bank to release its rate decision. That's at 6:30 a.m. New York time. At 1:30 p.m., we'll get the Baker Hughes U.S. rig count. It's a great indication of what the price of oil could do. And then, as we were saying, the G7 Leaders Summit kicks off today in Cornwall after President Biden met with Prime Minister Johnson yesterday. High on the agenda will be the global tax pact, the pandemic, China, and of course, climate change. So for more on this, let's get straight to Cornwall and to our very own Guy Johnson on the ground at the summit in Cornwall with a Bloomberg first. Guy, over to you.
Francine, thank you very much indeed. One of the huge focuses of the G7 summit is what is happening with vaccine distribution. The EU has led in this process of delivering vaccines to the rest of the world. I'm joined now by Charles Michel. He is, of course, the president of the European Council. The Council obviously is the coordinating body for the EU 27 leaders, has a significant foreign policy role as well. So we'll be able to touch on many of the subjects that are being addressed here at the G7. Mr. President, thank you very much indeed for your time today. Let's start off with vaccines, because it does seem to be at the center of what we're going to be dealing with here at the G7. The EU has delivered the most vaccines to the rest of the world. It has been a huge exporter of vaccines. I'd be curious to know what the latest number is. Yet the President of the United States comes here and once again delivers a headline that takes kind of really everybody's attention. Is that a source of frustration for you?
No, on the contrary, we are very pleased to be joined by the United States, and you are right, we took very important decisions because we understood immediately that it's a global challenge, and that's why we took the decision to export vaccines that were produced in Europe, and right now we have already exported 350 doses to the rest of the world, and we took the decision 2 weeks ago to donate at least 100 million doses by the end of this year, and in fact, probably we will donate more doses because we will continue to coordinate with all the member states. But the most important, in my opinion, is the cooperation and the coordination among the G7 countries in order to be convinced that we need to donate vaccines and to make sure that the vaccines are accessible everywhere.
Do you think delivering vaccines to the rest of the world allows other things to happen? There is a conversation that I often hear talking about the idea that many poorer countries struggle to deliver on climate and the proposals that are being made by the G7 and other bodies. We're looking forward to COP taking place in Glasgow later this year. Is it critical that vaccines are delivered so these countries can also deliver on other aspects of what the world needs them to do, i.e. deliver on the climate process?
You know, the first priority, of course, is to defeat COVID-19. This is the first priority, and we want to be safe until everyone is safe. It's very clear, point one. But there are many links between the different topics. Take the economic recovery, for example. The first economic measure is to make sure that vaccines will be accessible everywhere, point one. And point two, climate change is a huge and a very important challenge. And Europe played a very important role. And I remember a few years ago when the United States, with the previous administration were reluctant to consider climate change as a top priority, we took fundamental decisions. We decided 18 months ago to make Europe climate neutral by 2050. This is a very strong ambition. We decided to implement what we call the European Green Deal. It means that we want to open some political debates at the international level. The carbon pricing, for example, or another important topic is the support, the financing support for the developing countries.
I want to come back to climate a little bit later on in the conversation and talk more in detail about what is happening here. But first, I want to address one of the other subjects that is likely to dominate the agenda, and that is China. The United States, President Biden, is looking for the G7 to adopt a robust stance towards China. You talked about China being a potential systemic adversary yesterday. Can you just define what potential means and what systemic means?
Because we observe that there is a lack of reciprocity at the economic level. We are observing also unacceptable trade practices by China. These are very concrete examples. But we have a clear vision in Europe what we want with China. First, we don't paper over the human rights, the Uyghurs in China, the situation, or the situation in Hong Kong, for example. And we are very clear, and we took very clear and strong decisions against China because of this behavior that we don't accept. Second, we think we need to engage with China on some global topics, COVID-19, health. These are topics for which a dialogue is useful and necessary, with China included. And three, we want to rebalance the economic relationships. We are observing indeed that the Chinese companies, they don't have the same model. This is not the same situation like in Europe or in the United States. This is another economic model. This is another political model. Yep. We want to engage in order to promote our values, to defend our interests. We don't want to be naive, and we think that this cooperation and the very strong ties between the United States, Europe, and the other like-minded partners is key in order to have more influence and to try to push China in a more positive behavior.
Do you think that the trade deal that you were behind was a mistake, therefore?
No, certainly not. This was an important step in the right direction because for the first time, China took very important commitments. Of course, we need to make sure that they will implement the commitments that they made. I'll give you one concrete example. For the first time, China took some commitments at the social level. This is for us very important. We want to make sure that we can fight against the forced work or the forced labor, for example. This was an important priority.
But you talk about being a potential systemic rival. Potential. I just want to. You're not convinced yet that China is a rival.
We are convinced that China has a strong international ambition. We have also seen how China has tried to take the place that was not occupied anymore by the United States the last year when Donald Trump took the decision to be less engaged in the multilateral model. And that's why we are not naive, I repeat. But we want to make sure that we can be efficient when it comes to the promotion of our values and the defense of our interests. We think also this is important not only to react but also to act and to have a more proactive strategy at the international level.
You had a long phone call with Vladimir Putin last week. The President of the United States is going to be speaking with him next week. What advice would you give following your phone call with Vladimir Putin to President Biden?
I don't give any advice to the President of the United States. He has a huge international experience. But indeed, this will be an important moment. this meeting between Vladimir Putin and Joe Biden. And today or tomorrow, we'll have the opportunity with Joe Biden to prepare the way we will work together when it comes to the relationships between Europe, the United States, and some authoritarian regimes. We spoke about China. This is the same for Russia. We don't accept the disruptive activities by Russia, the illegal actions by Russia. We stand firm to protect the eastern borders of Europe. And I think that this meeting could be important in order for Vladimir Putin and Joe Biden to clarify what are the important principles, what are the important positions, to try to understand if it's possible or not to improve, being very realistic, the relationships between Russia and some other countries in the world.
Will Nord Stream 2 be completed and become operational?
This is a decision taken many years ago, and you know that this is a regular debate around the table of the European Council. This is not a secret. There are different opinions around the table of the European Council, and we'll certainly have again the opportunity to discuss this topic with some American friends.
Okay. I mentioned we should talk about climate, so let's just do that as we wrap the conversation up. Is it possible to put the United States and Europe into a position where they can have coordinated policies towards climate change without the United States having a carbon price?
This is an absolute priority because we understand that this is a big economic transition of this century, and it's important to make this climate crisis an opportunity for the world, for the growth in the world. But it means that we need to take fundamental decisions, and the question of the carbon pricing is a very important topic. And we have decided in Europe to put very high on the international agenda this topic, because we need some common standards. If we want to be able to reach our goals, our common goals, we need to take fundamental decisions. This is paramount if we want collectively to be serious. I understand also that we need to take into consideration the social transitions for the economic sectors that could be affected by the decisions that we intend to take, and that's why this question of the transition needs certainly a lot of coordination and a lot of cooperation.
Mr. President, thank you very much indeed for your time today. We greatly appreciate you stopping by to talk to us. Charles Michel, the President, Francine, of the European Council. Back to you in London.
Guy, thank you so much. Great work there. And I believe it's also the first interview that the EU actually gives at the G7. Great to get some insights on the relationship that he's expecting the EU to Russia to have, also on a day where Nord Stream 2 is one of the main focuses that we're watching today. I know, Matt, that was definitely on your radar. We'll have plenty more on that. And then coming up, I think we look at risky assets. But Matt, if you look at the Nord Stream 2, we're getting some tests today, and it'll be interesting to see how the EU handles Russia.
Yeah, interesting to see. You know, the EU, in a sense, is on the back foot here because the U.S. wants to deal with China in a more aggressive way. The EU wants to make deals with China. The U.S. wants to really stop Putin in a more aggressive way, and the EU is making a great big deal with Putin. So it's interesting when you've got this geopolitical friction. On the one hand, you've got the U.S. against these other global players, while the EU is engaged in very serious commerce with them. So I'll be excited to watch how this works out.
Yeah, coming up, risky asset, the latest classification proposal from banking regulators spurring more volatility for cryptos. And then later this hour, Yeri Sten, Goldman Sachs chief European economist. This is Bloomberg.
Shared to multiple groups.
Bloomberg Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London and Kaylee Lyons in New York. Now, we got yesterday this inflation data out of the U.S. that everyone seemed to want to see. It was very widely watched. It was very important, but it didn't seem to make much of a difference in terms of the markets. Check this out. We welcome every day at this hour our Bloomberg radio listeners on London DAB Digital. You can't see this chart, so I'll just tell you what it says. CPI, and this is the core at the highest level that we've seen since all the way back in 1992. I was enrolled as a freshman at Denison University that year. I didn't really do very much at school, but prices were rising at the same pace, and it hasn't been since, well, I guess that was almost 30 years ago now that we've seen this level of inflation, and yet the markets still bought stocks, and the markets still bought bonds. Eddie Vandervalt, Bloomberg MLive editor, joins us now to talk about this. Really, it was the 10-year yield, Eddie, that surprised me the most, dropping down to 146, even though inflation beat the forecast. What gives?
Absolutely. I read John Author's earlier today, which everybody should every day anyway, but he was talking about how much optimism is in this market and how much money is riding on the fact that inflation is going to be transitory. Because as you say, inflation really high, bond yields really low, and at the same time, stocks, just powering on. So it's really hard to see. It's not hard to see, but if the market is wrong about this, that the fact that all of this is transitory, then, we're in for a major correction here.
But Eddie, if the markets, I'm not, if central banks say one thing and the markets actually agree with them, is it dangerous because it's groupthink, or actually does it pretty much validate what the central banks have been saying all along?
Look, I think the central banks are winning at the moment. The central banks are they're winning the argument on the on the debate of whether or not inflation is transitory. But if we do start to see wage inflation picking up, then I think it's going to be difficult for them, and we've already seen some of that. But I think the job market is going to be absolutely telling, and not the bottom line jobs figure, the wage inflation. I think that's where we'll be really focused on for the next few months.
Eddie, quickly on crypto, banking regulators proposing classifying Bitcoin as the riskiest of assets. Is that a good thing or a bad thing for the crypto market?
Kelly, I absolutely think it's a good thing in the long run. I think if you tell people this is a risky asset class, you can only buy so much of it, then there are going to be some people that say, oh, hang on a minute, I can buy so much of it. So I think this opens it up to a whole new investor class. Regulation ultimately is needed in this space because it brings more investors to it.
Eddie, thanks so much. As always, Eddie Vandervalt, their Bloomberg MLive editor. Now, coming up a little bit later today, we'll also speak with the chief executive of Bitcoin mining company Riot Blockchain. He's Jason Less. That's at 1:30 p.m. in New York, 6:30 p.m. in London, and this is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacqua, and we'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of two very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television.
Again. Broadway's returning. June.
Have you bought tickets?
Is busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lines in New York. Now, a prominent Harvard Medical School professor has resigned from the U.S. FDA advisory panel over the agency's decision to approve Biogen's Alzheimer's drug, Aduhelm. Now, Dr. Aaron Kesselheim is the third person to quit over the clearance, which he called probably the worst drug approval decision in recent U.S. history. Now, two big clinical trials produced conflicting results on whether the drug could slow cognitive decline. And this is something I know, Matt, that you were extremely passionate about right from the beginning, the approval actually, when we got it on Monday, because there was a lot of people saying this should have never happened.
Well, and Max Neeson from our Bloomberg opinion team pointed out that one of the studies Biogen did failed, and the successful study only showed a 22% reduction in cognitive decline. So even that doesn't seem fantastic. And the concern to me is that it magnetizes R&D dollars to the wrong process, what could be the wrong process.
Yeah, we'll have plenty more on that, maybe with Arsene Fazeli a little bit later. Coming up, Yari Sten, Goldman Sachs chief European economist. We'll talk, of course, about the ECB and the press conference of Christine Lagarde yesterday. This is Bloomberg.
valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Matt, a lot of the focus, of course, is on the inflation number we had yesterday, but today we also turn to the G7 in Cornwall and see what they can come up with in terms of vaccinating the developing world, climate change, and, of course, how to deal with Russia and China. It's lovely, especially when it's sunny.
Yesterday looked gorgeous. I mean, it was only 60 degrees and change in Fahrenheit, of course, but absolutely a nice place. The weather not as inviting today, and maybe the meetings are going to be a little bit more difficult today as well, because as you say, they've got to deal with Russia, they've got to deal with China, and we just heard from Charles Michel with Guy Johnson saying that Europe wants to do a deal with China. They've already got a trade agreement that they like, and Europe wants to buy gas from Vladimir Putin and Russia. So they're working closely together with Russia in a commercial way. Maybe those interests aren't exactly aligned with U.S. interests.
All right. On a lighter note, I think they're having turbot for dinner and then a barbecue on the beach. I was sent the menus.
It's always turbot.
Johnson, of course. It's always turbot, served by the UK. It probably has something with fishing rights with the EU. Kaylee, the market's not looking at the menus, but looking at inflation.
Not looking at the menus, looking at inflation and deciding that they believe, central bankers, that it is indeed transitory. We saw that evident yesterday in record highs for U.S. equities and bond yields moving lower. And those record highs are continuing today. In Europe as well, the Stoxx 600 climbing 0.4% to an all-time high. And here in the U.S., futures aren't moving too much. We're only up 2 points on S&P E-minis, but again, that would indicate a record open in about 4 hours' time. In the Treasury market, we're going nowhere this morning, but we are down around that 1.43% level, the lowest since March, heading for the worst, biggest weekly decline in Treasury yields in a year. And then the dollar was weaker earlier, but now it is broadly stronger in the G10 space. As for some stocks moving before the opening bell, I, of course, have to start with the meme stock. AMC, it's fallen about 24% in the last 2 days, but then S&P Global Ratings raised its rating on the company to CCC positive from CCC negative, that aiding sentiment with the stock up the better part of 3%. And, of course, GameStop is one of the other OG poster children of the meme stock phenomenon. It fell 27% yesterday after its quarterly earnings report. Today, though, a little bit of a rebound, up about 5%. Two stocks moving to the downside, I wanted to mention, one of them being Vertex, the pharma company. It is halting the development for a closely watched therapy for liver disease. That has the shares down 11%. And CureVac, the COVID-19 vaccine maker, is down more than 6% of those ADRs after a report that Germany, Matt, your Germany, is dropping it from its vaccination campaign.
Not just my Germany, CureVac, based in my alma mater town of Tübingen, where I finally finished my university years in Tübingen. That's where CureVac's headquarters are. I've got a great chart, speaking of Germany, put together by my erstwhile producer, Hillary Clark, on the Bundesbank's forecast. Just coming out this morning, it looks hot. They expect a return to pre-pandemic growth by the end of this year. They expect growth of more than 5% in 2022. By the way, these were pink and green. We've got a regular viewer, Olivia, who doesn't understand pink and green. So we made them pink and blue for her. And then in yellow, you see growth kind of calms down to the 3% level in 2023. But it looks strong, and the Bundesbank doesn't see inflation as a real problem, Francine. This year, 2.6%, but that comes down below 2% for the following couple of years in the forecast.
Yeah, and really everything in the markets right now depends on what inflation does and expectations. Now, European Central Bank has renewed its pledge to maintain faster emergency bond buying. The ECB President Christine Lagarde spoke yesterday at a news conference.
We expect economic activity to accelerate in the second half of this year as further containment measures are lifted. Uncertainties remain as the near-term economic outlook continues to depend on the course of the pandemic, and how the economy responds after reopening. Our new staff projections point to a gradual increase in underlying inflation pressures. The Governing Council expects net purchases under the PEP over the coming quarter to continue to be conducted at a significantly higher pace than during the first months of the year. We see the risks surrounding the euro area growth outlook as broadly balanced. Any discussion about exit from the PEP, as you just mentioned, would be premature, it's too early, and it will come in due course. But certainly, for the moment, it's too early and premature, as simple as that.
Well, joining us now is Jari Sten. He is Chief European Economist at Goldman Sachs. Jari, thank you so much for joining us. So it does seem that the recovery in Europe is pretty strong. We should have the first disbursements of the recovery fund, I think, in the coming weeks for certain countries. Are you worried about inflation, or does the ECB actually have bigger problems than inflation?
Yeah, I mean, first of all, we agree on the strong growth prospects. We think the incoming information is very encouraging. On the medical side, on the data side, in terms of the reopening, and we see very strong growth into the summer across the euro area. Now, on inflation, we are, of course, seeing upward pressure. We think that some of the inflation metrics will continue to move up over the next 6 months. So we think German headline inflation, probably the most eye-catching here, will reach 4% in November, but we think it will be transitory. We think that inflation will slow again into 22 as some technical factors unwind, and as underlying inflation is still subdued because there's still a lot of slack out there. And so we think the medium-term inflation outlook remains pretty subdued, and share the ECB's assessment on that front.
So, Jari, when are you expecting a change in policy from the ECB? I mean, if you listen to Christine Lagarde, she was really at pains and saying, like, look, steady as they go for the moment, we're not doing anything. How soon could a shift, even in terms of the and the bond buying slowing down, how soon could that come?
Yeah, so they pledged to maintain that significantly higher pace in Q3. We think they will end up buying a little less in Q3 than in Q2 on the back of seasonal issues. I think that was well flagged yesterday. And we then think the September meeting is going to be quite eventful. We think they will agree on a step down in the PEP pace in September for the fourth quarter, given an improving outlook. But we also think they will conclude the strategy review in September, come up with a 2% symmetric aim for inflation, and use that to enhance the forward guidance. And so we don't think they will hike anytime soon. We have them on hold until 2025 to make sure that they provide enough support to the economy well into the recovery.
Jari, how much longer are they going to stay close to but less than 2%? Is that phrase going to change?
Yes, we think so. We think they will go to a 2% symmetric aim over the medium term. So that would be a slight shift up from the current formulation. It would clearly be quite a lot simpler. And we think there's a lot of support for that switch. If you look at recent comments across the Governing Council, I think we see that most people are on board with that switch. Now, we do think it's going to be paired with putting somewhat more weight on housing cost in the inflation assessment. Owner-occupied housing costs in Europe are not reflected as in other countries. And so we think the combination of that is actually going to be a bit of a wash as far as the policy outlook goes, because you're on the one hand going to 2% symmetric, raising the inflation target a little bit, but by including housing, you also raise the measured amount of inflation. So we think the key really is the strategy and the forward guidance, as I just said.
I wonder also about the importance of monetary policy, the weight of that importance. You know, we see the paradigm shift very clearly in the U.S. from monetary to fiscal. Here, it's a little bit more blurred. Do you expect monetary policy to continue to carry the same weight?
Yeah, I mean, I mean, you're right, of course, that the shifts have been bigger in the US. We have seen much more fiscal stimulus in the US, but I would also say that we have seen a significant shift in Europe too. We did have a big expansion of national measures during COVID, and of course now the recovery fund is about to start, which we think will be very helpful in supporting growth in the south of Europe. So I do think there's been a shift. But given how much slack there is in the euro area and given how low underlying inflation pressures are, we think the ECB needs to be on hold here and provide a lot of support for quite some time to come.
Yari, be it because of fiscal stimulus or just a better vaccination rollout here in the U.S., where I speak to you from, we are ahead of Europe when it comes to growth. Europe obviously is catching up now, but at what point is growth going to peak on the continent?
Yeah, we have the peak in growth in Q3. So, in the US, it looks like the peak is going to be earlier than that. And we probably have moved already past the peak in the US in terms of the monthly growth rates. And our US team expects growth to remain strong, but to slow sequentially from here. Whereas in Europe, we are just at the start of that acceleration. We are seeing very encouraging signs in the June survey data, the early signs that we have so far. And we think there's going to be a big step up in growth. So we have about 2% growth in Q2. So this is quarter over quarter, not annualized. So this is a big number. And then it peaks at 3% in the euro area in Q3 in our forecast.
Yari, thank you so much for joining us. Yari Stender, Chief European Economist at Goldman Sachs, talking about everything that we heard from the ECB. Now, on another note, this is something that, of course, the European Central Bank and Christine Lagarde has also been pushing on, money and equality. It's also a new special bringing together senior women in the UK financial industry to discuss how the industry's post-pandemic future, the risks and opportunities for both women in organizations. Now, Tina Lee, the Chief Executive Officer of Deutsche Bank for the UK, is one of the leaders I spoke with. And here's what she said about hiring and retaining female talent.
I think we're pretty good at hiring, particularly at the junior level. Every institution tries incredibly hard to get a good gender balance at the intern level and at the graduate level. I think the real challenge is what happens once they get into an organization. And certainly what we see, and I think it's aligned actually across the industry, is we lose women at every corporate title. Yeah. It's not necessarily because they're leaving to have children. They leave at VP, they leave at director, they leave at managing director, so that by the end, you're left with a relatively small cohort versus what you started with. So I think as an industry, we have to do much better in terms of not only identifying talent, but most importantly, nurturing talent at those critical phases, and particularly at the VP level, where there are hundreds of VPs, thousands of VPs. And how do you make sure that you've identified and nurtured that talent and give them the right voice?
That was Tina Lee, Deutsche Bank's Chief Executive Officer for the UK and Ireland, and you can watch the full conversation on Bloomberg TV this weekend with a half-an-hour special airing at 2:30 p.m. UK time on Saturday. I have to say at times it was actually quite emotional hearing some of these senior leaders talking about how they started out. Coming up, if it's Tesla's fastest car yet, we'll discuss the Model S Plaid, which can reach 60 miles per hour in less than 2 seconds. That's coming up next, and this is Bloomberg.
such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, the CEO of Tesla, Elon Musk, showed off the Model S Plaid Edition, the electric car that is its quickest vehicle to date. Musk rolled out the car at an event yesterday in Fremont, California.
Why make this really fast car that's crazy fast and everything? And I think there is something that's quite important to the future of sustainable energy, which is that we got to show that an electric car is the best car, hands down.
Craig Trudell, Bloomberg Europe Autos editor, joins us now. He runs our coverage for us in the region. No big deal. Craig, I just want to clarify one point. Now, I think this is very cool, and I agree with almost everything Elon Musk said, but the car does not reach 60 miles an hour from a stop in 2 seconds. They give it a rolling start of about a foot, so it gets to about 5-6 miles an hour. So really it has a 5 to 60 time in under 2 seconds. This is a traditional thing that car makers do to make their time seem faster, but I just want to be as accurate as possible. Nonetheless, very cool car.
Absolutely, and you know, publications like Motor Trend do sort of, you know, allow for this you know, rolling start in their sort of calculations, to be fair to Tesla. But of course, it is extremely quick. I think the way that Musk put it last night was that, you know, it will do a number on your limbic system, which was a nice line. It is, you know, sort of for Tesla, kind of a niche within a niche, just to use Musk's own words. A couple of years ago, that was how he described Model S and Model X, that they sort of make these models for sentimental reasons. But really, to the point that he made in that clip that we just played, this is really about sort of, you know, offering evidence that electric cars really can deliver extremely impressive performance, and it's not a matter of sort of having to, you know, give up anything to go from a combustion engine to an electric car. You can actually get more out of it.
Can you hear the same sound, Craig, of the engine roaring? I mean, I'm not a huge car lover like Matt Miller is, but if you're going to have the best car, are you going to try and replicate actually what a Ferrari does?
I think that's one of the cool things actually about electric cars, is like this sort of whir of a car that you know, doesn't have, you know, it has very little noise, and yet, you know, you do sort of get thrown back into your seat when you hit the pedal. So it is very different from a Ferrari, and there is some sound there, but it's a totally different thing. I think, you know, people who do
it's an important issue.
Electric cars do get used to it. Yeah, but there are definitely
and some
people
prefer
who,
it, Craig.
Yep.
I will say, so a lot of people, you know, this has happened to me as well. I love the sound of an internal combustion engine, but it's kind of cool when you get that kind of performance and don't hear any sound, or you hear the whir of the electric motors. So it is a very important topic, especially if you're going to spend this kind of money. You want to have an experience that is unique. Anyway, Craig, thanks so much for joining us. Craig Trudell there runs our autos coverage here in Europe. Coming up, high conviction bets. We'll hear exclusively from John Gray, Blackstone president and COO. Next, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You know, what I'd say is, I don't know if it's advice or what I've learned along the way, but definitely the best thing is to be a high conviction investor. That when you dabble and just put a bunch of money here in things you don't know or understand, it tends to work out badly. But when you see something, single family housing, global logistics, the movement of everything online, and you lean into that, that's when you have the best outcomes. And to me, that's really important.
If I said to you, I have $100,000 and I want to invest it in real estate or something else, that's all I have, $100,000. Where should I put my $100,000 today?
Well, I would say in real estate, you know, we love what we're doing in the private REIT space. I think you can invest in a good basket of public REITs as well. More generally, I think the S&P 500. I think the market's trading, even though values have moved a lot, the market's trading in the low 20s, and when you compare that to where the 10-year is at 1.6%, I think you'll do fine over a long period of time. Plus, there's a lot of exposure to fast-growing tech companies in there.
Where should I not invest my money?
You should stay away from buggy whip businesses. You should